Hey, what's up, guys? It's Marcus back with another trade. Just showing you guys the trade that I took Friday, using my Juicy Doji method, using the Heiken Ashi candlesticks. So if you see here, this is the start of Friday. Now, one of my rules is that I don't trade the first 10 minutes of the market. It's just too volatile, too choppy. I don't like it. But I wait till 9:40, and that's when I'm able to actually jump in the trade. So if we go here, so um, I waited. This is about nine. Well, yeah, this is 9:35, 5 minute candle, but it showed up at 9:30. So I waited, and then at 9:35, this 9:40 showed up, and then at 9:40, this showed up. So here is where I started looking to see where I could hop in a trade. So as you can see from the beginning of when market opened up until this 9:45 5 minute candle, you see the volume going down. And this is something that I actually like to see, because that way when I do see a juicy doji and that volume shoot up, it's pretty easy to tell that this is going to be a good volume uh, riser that I can easily distinguish and jump in. And that's exactly what happened. So volume was decreasing, and then at 9:45, this doji started forming. Now, at first, it didn't look just red. It was green and then red and switched back to green. And then it stayed red for a while. But then this was switching back green and red. And usually, what I like to do is enter on a trade when it's either green doji, green volume, meaning everything's matching up, the candle is showing upward movement, the volume is showing buying, or red doji, red volume, where it's showing red candle movement, price movement downward, and selling volume. So what was happening while this was forming, it was red, but this was switching back between green and red. And what it was confusing at first, but once you go to the 1 minute candle, it'll show you what was happening here. So this was around 9:45. This 9:45 is when this 9:50 candle showed up. So let's look at the 1 minute starting at 9:50 45. So let's get over here, get over here. Okay. And this is what I thought was happening. Basically, this is a bunch of consolidation. And look, right here at 9:45. So we see consolidation is a little red, then it was going up green a little bit. But mind you, the 5 minute candle was red, which those are the candles that I enter on. I don't enter on the 1 minutes. I just use 1 minutes as confirmation. But as you can see here, it's consolidating. It went back red a little bit, going back down, just hitting on VWAP. But as you can see, around 9:48 and around 9:49, you see the volume and you see the price starting to go down dramatically. So it was around 9:48.19 that I hopped in this trade, because I saw this red volume going down. I said, okay, it's done consolidating, it's gonna go down. And when I jumped back into the 5 minute, that's when, let's go back to the day. La, 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 Sorry for the lags. So when I came back to this doji on the 5 minute, the volume flipped red. So I got my confluences: red doji candle, strong juicy candle, increased volume before than the previous doji candle. I jumped in a put at the money put for my 10% TP, and it hit within a little over a minute. It was about a minute 20 seconds that I hit my 10%. Now, granted, it was only about $20 that I made here, but that just shows if I can make $20 in under a minute using this method, then I can make $200 using this method. I can make $2,000. So I love this method. I discovered this when I was bleeding, trying to figure out options. I was trying so many different methods. I was, um, using support and resistance. I was trying to use the breakout method where you box in the pre-market, and if it breaks out above, the box, then You can get calls or break out below puts. But using that method, on days like this where if you look, if I were to do a box for the pre-market activity, let's do a box real quick so I can show you why I didn't like that method. Okay, so what you would do, you would take pre-market high and pre-market low, and you would mark a box, and then basically if the price were to break out of this box, that's when you would go into puts or calls. So it happened way over here, but what time is this? Around 12:30. I'm not trying to stay in the market till 12:30. I'm trying to get in and get out as soon as I can, because one of my trading rules, along with not trading before 9:40, is that I'm out of the market by 12. If nothing happens by 12, then I'm out for the day. Because usually my setups on a good day, they'll happen multiple times before 12, just like today did. My juicy dojis, one happened here, then boom, one happened here, increased volume above the previous candle, and then look right over here, boom, it wasn't that much volume. What was this volume? 561,000 over 594,000. So boom, three, all before 12 o'clock. Then I want to say it happened again down here. Well, let's say, well, yeah, 12:20, but three three opportunities, boom, 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 back to back, all before 12 o'clock. That's why I like this method, because I don't have to stay in the market all day. If the setup happens before 12, it does. If it doesn't, oh well, it'll happen the next day, hopefully. But I just wanted to show you guys that this is a method that I believe is going to get me to my goal of $1,000 a day in my trades. So just a recap of the strategy. Again, I'm using the Heiken Ashi candles. I don't think I said that before, so I don't know why I said again. I'm using the Heiken Ashi candlesticks. Basically, what that is for comparison. I've been using Webull for a while. I don't know why confusing things. Okay, so regular candlesticks. Here's the regular candlesticks. And I don't know about you, but this is confusing as, yeah, that's confusing to me. I could learn what all of these means and the reversals and bull flags and all that, but I don't have time for that. But I just remember watching this guy on YouTube, and he used the Heiken Ashi candles, and basically you see how jumbled up this is. You don't know if this is gonna, continue up or do what. But when he flipped to the Heiken Ashi, and you just see, okay, it's going up, staying green. Once it reverses, it stays red. And when it goes back up, it stays green. It's basically the average price of the average, price movement. That's what it's showing here. And I can give a more detailed explanation of what Heiken Ashi is in a different video. This is more so just an intro of my strategy and what I've been doing for the past few weeks and finding some good consistency. But step one, Heiken Ashi candlesticks. Make sure when you're on your chart, you're using the Heiken Ashi candlesticks. And here's a quick explanation if you want to pause and read that. That's a brief explanation of what it is right there. But okay, flip into Heiken Ashi candlesticks. That's step one. Step two, you want to have some kind of key levels marked on your chart. So with the SPY, all I trade is the SPY. That's all I look at. That's all I trade. That's all I'm ever gonna trade. You see some of these, traders. They say, "Oh, all you have to do is the SPY," but then when you go in their content, they're trading all kinds of stuff. And yeah, you can trade a bunch of stuff, but I found so much success just trading the SPY. So with me just trading the SPY, I'm able to really learn it, see how it moves. I've had these key levels marked for weeks now, based off of past movements. So that's kind of a benefit. I don't have to worry about marking up the charts every single day unless it goes up to somewhere where it hasn't been before. Right now, it's been in a region where it's been trading for the last few months now. So I have all these key levels marked. So that'll help me So where, like for right here, for instance, so at 588.64, you see price came up, hit this, dropped, came back to this key level, 587.30, went up, back up to 589, which was one of the more important key levels since I marked it a little darker. And you see once it touched here, it kind of went down for the rest of the day. And then when it got here, I think some kind of news happened, but you can see it happened right at this key level of 588.22. Touch there, came into there, then whoosh, washed all the way down. But having these key levels will kind of help you to focus and help you to determine, okay, well, price is coming down. Let me pay attention to see if a doji forms on this key level. And sure enough, right here, it did. Formed, doji formed, higher volume. That's a good place to get in for a call. Get that 10% move on the options contract. Boom. You're out for the day at what, probably 10:10. So step one, Heiken Ashi candlestick. Step two, have your key levels marked. And basically how you mark key levels, what I like to do or what I've been learning is if you go to a 1 hour chart, well, I have a lot of key levels marked, so just forgive the fluff. Let me hide this for a sec. La la la. Boop. So basically what key levels are is levels where price has reacted in a strong way. So you can see a few here. So basically where you see this 598.30, you see price came up here, was touching this level, touching this area, and then whoosh, swap down. That would be an area where you would mark. And then here's another area. So you see price came up, touched it, dropped, came up, touched it, dropped, then finally broke through with a lot of volume. Here would be another area. And then vice versa, down here, you see price coming down, touch this area, and then it sold back up in a major way. So that would be an area to mark. And here would be another area, areas where you see a lot of consolidation. So it came here, touched, kind of hovered above it, touched, kind of came back above it, hovered, then dropped lower, once it got some selling volume. But here be another place. So what I like to do on the 1 hour chart, then the 15-minute chart, I like to mark these levels where you see these big reactions. Here would be another one that came up, touched there, went back down, came back up. There'd be another one, touched back down. Here'd be one, it was coming down, it dropped. Came down, hit this, jumped back up. So that would be one. So basically, I have a accumulation of all these key levels that I've marked. That's why I look so jumbled. But it'll look like a lot when you go to the higher time frames because it is. But once you get back to the 5 minute, the lower time frames, it doesn't seem as hectic. It is, but I've kind of trained my mind to where I kind of know what I'm looking like, and you'll get that too once you start getting into it. But anyways, that was a quick lesson. We'll do a more detailed how to do key levels in the future. But so step one, Heiken Ashi candlesticks. Make sure I'm on the right day. Yeah, I'm on the right day. Step one, Heiken Ashi candlesticks. Step two, have your key levels marked. Step three, you're only entering on juicy dojis that have a higher volume than the previous Heiken Ashi candle. So we already looked at this one. So for example, we see this 950 doji candle. And let me hide the drawings real quick so it kind of helps. So you see this, let me hide VWAP real quick. That'll kind of help. And hide the moving average. All right. So you see this red doji candle right there. Let me zoom in some more. Okay. All right. So you see this red juicy doji candle that formed. So it had significant higher volume than the previous candle. So what that tells you is that there's going to be a strong movement down. Since red going down, green going up. I didn't explain that, but it should be self-explanatory. So that was going to be a strong movement to the downside. And basically, in the stock market, if you don't already know, you can make money whether the price goes up or the price goes down. And what I do specifically, once I see these red dojis form with the higher volume, I enter an options contract. And for this, if price is going down, you to enter a put. If price is going up like this here with this higher volume doji, then you'd enter a call. So step one, Heiken Ashi candlestick. Step two, have your key levels marked. Let's get the key levels back. And then step three, you're only entering on these juicy red dojis with higher volume than the previous Heiken Ashi candle. So once you see that juicy doji form, and as soon as you observe that the volume has increased over this previous Heiken Ashi candle, you're going to go ahead and enter into your options contract, whether it's a put like this one or a call like this one. So let me show you what I do. So this is a chart where I'm on my if I'm on my laptop screen right now, I'm on a monitor. That's why it's looking so small. But on my monitor, it's showing up bigger. So what I'm doing, let's go back to that 950 candle. So what I was doing on Friday, I was watching this. I was kind of watching the volume go back and forth, green to red. But once I saw it was a red doji, red volume, I went ahead up here. And then, so this side, and I'm using Webull options trader. Basically, this side is your put side, and this side is your call side. So what I did, I clicked on the in the money, or at the money, or in the money, I forget which one, put contract. And then what'll happen is that your options contract will show up down here. So I'll right. So I'll enter. I'll click the options contract over here. The price or the actual price of the contract will show up over here. Important thing to know when you're entering options contracts, the price is not going to be whatever the SPY is. So right here, the SPY was around what 587.84. That's not what you're going to pay for the options contract. If you see over here, the ask, these are the prices you're going to pay for the contract. And what you see a 2.11 for an options contract. This is going to give you ownership of about, or I'll say control over 100 shares of this ETF, this SPY. So what'll happen, since it's 100 shares, you move that decimal spots to the right. So the options contract would be $200, basically. So, and that'll kind of fluctuate, as the price is moving. It'll start to move down in this area if it's going into the money. And what basically into the money means is that it's increasing in volume and increasing in value. And that's a good thing if you're doing, that's a good thing when you're buying a contract that it goes into the money. If you start out of the money and go into money, that's a good thing. But if you go into the money and then out of the money, that's a bad thing because the options contract is decreasing in value. But what I did Friday, I clicked on whichever one I did, and let's go to 9:48 because that's the time that I got into the contract. Okay, right here. So about right here. And this isn't the exact contract that I got into, but this is just, it's going to show the same kind of price movement that's going to happen with all the contracts. So what happens when you get into your options contract, at around 9:48 is when I got into my put contract. What I do, I click on it, boom, the options contract shows up here. And then when you see this little 2, and then a 2 here, and then a 2 here, that is just linking all 3 of these windows together. So that way, what you do here is going to affect here. It's also going to affect here. So we talked about, this is your SPY screen. This is the actual price of the SPY, what it's doing. These are the options contracts for the SPY. whether it's puts or whether it's call, puts if it's going down, calls if it's going up. And then once you click in these spaces here, you'll see the actual price of the options contract, which is the actual thing that is gonna make or lose you money. So let me go back. I actually lost my. Okay, it's still there. So 9. Yeah. So options contracts here. This is the chart for the options contract. And then this is the area where you'll actually make your purchases of the contracts. So I clicked here, it popped up over in this window. But then if you look up here, it also fills in, you want a 589 put, 589 SPY put. And what I do right now, I'm only doing one contract because that's just how my funds are. One contract. And then here's the real important part, the part that's gonna make or break you. I have subsequent orders for a stop loss of minus 10% and a take profit of plus 10%. And basically what that means is that when I would get into the contract, basically what would happen, and let me do some lines just to show you. So what would happen once I hit click buy, I want one market order of a SPY put. What would happen, I bought this at 948. So 948, this is where I buy it. So I'll buy it there, but then I have two subsequent orders. And basically what those subsequent orders will do, let's say I was wrong on the trade, this stop loss of 10% will kick me out if the price drops 10% below where I got it. So I'm just gonna put it somewhere. Let's say I bought it at $358. Let's just say that to make it easy. My 10% stop loss would be around 348. So let's put that right there. So that would be my stop loss. It will kick me out 10%. I lose 10% of the contract. But the take profit, if I bought it at 358, will go up to 368. So basically what would happen is I'd buy the contract around here where the price is, and now whatever happens, I would just buy the order. If it goes up, it'll kick me out in a profit, and then you'd see that up here. Basically, it will say my P&L jumped up to whatever, or if I lose and it hits this order, it'll say I lost however many percent. So what happened on Friday, I bought the order here, and this isn't the exact contract because it looks kind of different with every contract. But what happened, I bought it around 948 at 9 or wait, 9. Okay, I'm sorry. I bought it at 949. So what's the price here? 52 is dropped out to 42. 42. All right, imagine that 43 is 42. And if that was 53, then 63. Okay. Okay. So when I got in at 949, I was just there. The price was about to drop because I saw this Juicy Doji increase volume. So I knew the price was going to drop dramatically. So what I did, I bought the order and I just waited for my take profit to hit. So literally a minute later, boom, it hit my target easily, under a minute. Like I said, that was $20 trade. But just imagine if I had more capital, that could have been a $200 trade, a $2,000 trade, under a minute or under 2 minutes. Boom, just like that. So what I like about these subsequent orders is that it takes a lot of stress out of me having to sit here and wait in the trade, or okay, I'm gonna ride it out and then it drops and I'm still in the trade when I was in profit, but then it went out of profit. It kind of takes out the guesswork and it takes out the hesitation that I've been having for a while. it just gives me the opportunity to just enter the trade, and then I literally just close my screen because I'm like, oh my goodness, okay, whatever it does, whatever it does. But that's what I do. I click the button when I click my contract over here. The chart pops up. I'll click buy one market. Then my two subsequent orders will will show up there. And once it hits, it'll fill this order, cancel that order, and then I'll get out with the nice profit. So that's basically my trading strategy there. So I'll kind of go from the beginning again because I feel like I kind of jumble up my words. But what I do, step one, Heiken Ashi candlesticks. Step two, make sure my key levels are marked. Step three, I'm only entering on these red dojis or green dojis with increased volume over the previous Heiken Ashi candle. In this case, that's what happened here. Then I would go over once I identify my put or call opportunity. This case was a put. I would go over, and whatever my capital is, I will basically use my whole capital for these trades, but I'm not risking the whole capital because I have the stop loss and the take profit of 10%. So I'm only risking 10% of my account or my capital when I'm making these trades. So I'd go in, whatever my capital is, I'd find the one that's the most that I can get the most of out of with my capital. Click that, make sure it pops up on the chart, and then I'll go ahead and buy a market. My two subsequent orders, stop loss and take profit will show up. Then I basically just wait for one of those to hit. And what I've been seeing with these higher volume doji setups is most of the time this take profit is going to hit. That's just what I've seen. And it's real important that the volume and the candle match, whether it's red, increased volume in red doji, or green, increased volume in green doji. Because as you can see, it's a strong movement once these match. Now let me show you one that doesn't match and you can see what happens. So look right here, the 935 candle. This is another reason why I don't trade the first 10 minutes of the market. It's a green doji, it's a big doji. Nice. So, okay, you're thinking the price is going to shoot up, but it's red volume, it's selling volume. So what happened next? Boom, flush down. So you really have to pay attention to that. Don't just get into every doji you see because it's not telling the whole story. So that's why you want everything to match up. Red doji, red increased volume. Green doji, green increased volume. That's what you want to look for. And so another little tidbit before I get off, because I've been talking for almost 30 minutes, man. So another little tidbit. So I was telling you earlier how it was kind of confusing earlier because it showed up as a red doji, but this volume was flickering green and red. So I kind of showed you earlier, but what I do is I go to the 1 minute chart and I look basically to see whether price is going to break out either up or down. So here around 9:45 is when that started happening. You see all this consolidation. It was a red 5-minute doji, but these greens were going up. So I was holding off, say, okay, things aren't matching up. But then when this candle showed up and I saw this red going down, and I saw the 5-minute candle volume turning red, that's when it signaled me, okay, I'm going to get into this for a put. And then as you can see, flush down. So that's what you can do. If you're not certain on the 5-minute volume, you see a doji, but the volume is either showing green or red, you can confirm with the 1 minute candles on that movement. And that'll save you a lot of guesswork when you're looking for your entries. But with that, I'm gonna go ahead and get off because I've been talking for way too long and it's nighttime and I gotta go to bed and go to work and get trading in the morning. This video is as of Sunday, June 1st. Happy birthday to my sister. But we are gonna get into the market tomorrow. Hopefully I can get a live trade going for you guys. And this is what I'm gonna be looking for. These juicy dojis. I love juicy dojis and juicy volume because that's where I'm finding a lot of my monies. So I wanted to share that with you guys. I hope you guys have a good trading week. This is Marcus Tarver with Tarver Trades, and I hope y'all get some wins this week. See you.